Once you apply one of these scalping strategies, you'll be this guy.
Joking.
What?
Where have you got this money from? I'm not even joking. Right, don't give me a heart attack because I'll fucking call the police right now.
Drug dealing, mum.
Right, I'm calling.
Yep, that's right, your mom will think you're a drug dealer. These free scalping strategies are my absolute favorite and I cannot recommend them enough. So if you find value in this video, make sure to leave a like. And without further ado, let's just get down to the video. Right, so the first indicator I love when scalping is the MACD. Go inside the indicators tab and type in MACD, which is short for moving average, convergence, divergence. Click one time on it and close off this tab. Right, so we're currently on Euro USD 15-minute time frame. We have our MACD indicator over here. It's currently trending towards the downside. However, the candlesticks are telling me contradictive data. As we can see, it's pushing towards the upside. Very likely this is a consolidation before it continues to push up. So should we enter a trade now? This is an area of support over here. It's bouncing off the support with a bullish engulfing candle. Can we enter? Not yet. But why? Because the MACD has not yet crossed towards the upside. We need the blue line over here on the MACD to cross the yellow one before we start buying the trade. So as you can see, another 15 minutes has passed. A new candlestick has formed and we can see now that the MACD indicator, the blue line, is shooting above the orange line, which is what we want. And we are also seeing a new green candlestick, which is also an indication for a buy-in trade. But let's not forget, MACD is not the only good indication that we have currently. We also are bouncing off the area of support, right? This was a previous area of support. Every time the candlesticks touched this area of support, it went towards the upside, right? So this is our second confirmation that very likely bullish pressure is coming in. Yet there's another one that a lot of newbie traders overlook. Now this is our area of resistance. As you can see, this previous resistance over here has been respected multiple times. However, this candlestick over here is higher than these previous candlesticks. What does this mean? It means it's a new higher high, which usually indicates a push exhaustion push cycle before it continues to move up or down depending on the market conditions. So this is what we are expecting. The market is pushing up, MACD is pushing up, we are crossing the resistance and making a new high over here. Very good trading opportunity to buy. So let's say we would long this position on this candlestick over here. It broke the area of resistance, new high. Your stop loss ideally wants to be lower than all the candlestick wicks as well, just in case it does manage to turn around and maybe find resistance over here, so you don't get stopped out. It just bounces off and then continues to move up. This does happen in Forex. That's why you have to have appropriate stop loss so you're in the market to make money. So since we discussed now what's happening in the market, let's see what will happen. So it shoots towards the upside very nicely, and we definitely reached our take profit level. We can see the MACD indicator has now formed various green bars, which indicates bullish pressure, and the blue line over here is much above the yellow one, which is what we want on a buy-in market. Now, what you could do to maximize your trading gain is wait until the MACD blue line starts to cross the yellow one and close off your trade. So if we fast forward this trade a few days, as you can see, this would have been the outcome. It pushes towards the upside, downside a little bit more. You could have potentially even maximized your pip gains, and I'll show you how a little bit later in this video. But let's have a look at a short opportunity now with the MACD. So let's just establish what's actually going on. The market decided to find an area of resistance over here, started to consolidate and came back inside our previous area of support and resistance, which is totally fine. Now we are getting a new bearish engulfing candle, right? The red one is swallowing the blue one, which indicates strong selling pressure. However, is this a good enough trading opportunity to enter the trade? No. But why is it no? Because if we just draw a nice straight line over here, we can see that the support or the previous support has not yet been broken. As you can see multiple times, this red dotted line has not been broken. Over here, here, and even here. It's not broken yet, which indicates there could be buying pressure coming in. We cannot enter yet until the support has been broken through. Only then we can start to think about selling our trade and making money. We can also see that the MACD indicator in this case already has crossed through the blue line, through the 0 price level of MACD, and went towards the downside, which is a good indication for a selling opportunity. What we are missing now is a little price action for the candlesticks to become in our favorable position. So what is a favorable position? So if we just play the tool, first candlestick and second one over here, look at this. 30 minutes later, we get this nice bearish engulfing candle once again. As you can see, this bearish engulfing candle is actually lower than the red dotted line, which means it's a new lower low. The candlestick has closed now below the red dotted line, and it's a bearish engulfing candle as well. Bearish engulfing candle is a great entry opportunity or a signal to go short. So we would enter a short position on this candlestick over here. Stop loss would be just above all the wicks. So let's say 20. So let's do 20, 20 over here. And then let's see what will happen. So let's play the tool and it shoots towards the downside, and it would have been a very, very profitable trade. Now, a lot of newbie traders make this mistake and don't maximize their profits. I don't know why, but you really need to learn this. So as you can see, my take profit was 20 and stop loss was 20. So 1-to-1 risk to reward in this situation. However, look, if it just starts dipping, look at these candlesticks. Another hour, let's say, was all red candlesticks. And so you just keep waiting for candlestick closures. If it continues to close lower every 15 minutes, you should keep the trade running, and you could potentially make, instead of 20 pips, 30 pips, you know, even nearly 40 pips. Or another way to do it is wait for the MACD crossover that we are seeing over here. So around this area, let's say this candlestick crosses around 30 pips profit instead of 20. So in this case, you maximize your profit gain by 10 pips. In some other cases, it could have been 100, 200 pips. As long as you keep your trade open and it keeps dipping, you maximize your trading gain. And this is how you actually make money in Forex. You stay in the market alive enough, you get this opportunity, you take it, you make a bunch of money. Right, so the second indicator, and probably my favorite, is the simple moving average. So go inside the indicators tab and type in moving average. Under technicals, it will be moving average, double click on it and close off this screen. Now you should have two lines on it. Make sure to change the values to 25 and 50. Now we're currently on Euro USD 1 minute time frame, and this is why I love using the moving averages. We can currently see a nice little trend heading towards the upside on Euro USD, right? This is a nice trend, pulled back a little bit. We also see a nice candlestick wick pulling back in between the 25-50 moving averages, probably gonna continue to move up. Does suggest that on the 1 minute time frame. So now on the 5 minute time frame, we can see our 1 minute trend line just over here. We can also spot a 5 minute trend line that was happening over here. Multiple times was touched and went towards the downside. But in this case, we had a nice push towards the upside. What does that mean? The trend has now been broken. Push exhaustion, push scenario, very likely incoming to push towards the upside further on. So since we established everything what's going on the 5 minute, let's go to the 15. So as you can see, the 15-minute time frame, same thing, same drawings, just a little bit less candlesticks. And what we need to do now is just kind of remove the drawings a little bit. Now, we can see everything much more clearer. We can still keep this one over here. We can see that the 15-minute time frame had a nice trend towards the downside. Same scenario as the 5 minute, but we also now seeing a nice candlestick closure and a bullish engulfing candlestick. So the candlestick closure is closing above the 25 and 50 moving averages, which suggests already a great bullish trade and momentum. Not only that, it's a bullish engulfing candlestick, so it's two confirmations in one. It's a great entry opportunity. So all you need to do now is just enter the trade long. And now we want to aim for around 25 pips or so trading opportunity. I believe that's pretty damn good. Maybe 26 pips. Let's do 26. Stop loss just below the wick over here. So 26 looks pretty good. 1-to-1 risk to reward ratio. However, we can increase it. Let's see what's going on. So it shoots towards the upside immediately, and that's a great opportunity to make money. As you can see, it continues to move up nicely, and we can maximize our pip gain. As you can see, if it continues to move up, you might want to just kind of hold it on, and then if it touches maybe a wick or something, you close it off. It really depends how you trade. You could even potentially open another moving average, close the range a little bit, so if it dips below that moving average, then you close it off and maximize your pip gain this way. This is the best trading way for me, at least. I love doing it, especially on markets such as USD Japanese yen, where the market, if crashes or goes up, it really goes up very steeply. 300 to 400 pips profit easily within a day. This actually has happened to me multiple times throughout my trading career, so I suggest you guys to implement this in your trading. Right, so another indicator that I really love is the Stochastic RSI. So go inside the Indicators tab and click Stochastic RSI. It will be the third one down below the technicals, and close off the tab. Now, I never use Stochastic RSI without one indicator, which is the moving average. So add the 200 moving average on your screens, and this becomes a perfect pip gainer when scalping. So look at this trading opportunity. This is Euro USD 5-minute time frame. We are currently oversold on the Stochastic RSI, which usually indicates that buying pressure is coming forth. And we certainly are seeing some buying pressure. Bullish engulfing candlestick close and a cross of the 200 moving average line, right? We can see a nice cross and bullish engulfing candle. This could be a great opportunity to buy. So let's see. Long position, we would buy it. Now, what's important and how do you know where to actually place your take profit and stop loss levels? Go inside the 15-minute time frame and see what's going on. So currently we have on the 15-minute time frame as well a bullish engulfing candlestick. We also see in Stochastic RSI being oversold, and we are seeing that the 200 moving average is around this area zone. This should be your aiming direction of a resistance, right? Because the moving average or higher time frame moving average will act as a resistance zone. So what I would do is target this area zone of around 16 pips profit, and then stop loss would be on the 5-minute time frame. See what's going on. So below these candlesticks, so around let's do a safe bet around 12 and a half pips. Yeah, that looks pretty good. You're not touching these areas, maybe a little bit less. 13 and a half pips, that would be pretty damn good. So already our risk to reward is a little bit higher. Usually I go 1 for 1 and then maximize our pip gain, and this is a very similar scenario. So let's see what's gonna happen. We already established what's going on. Let's click OK. Boom, it's shooting towards the upside. You saw that every time it pulls back a little bit, push, exhaustion, push, exhaustion, push. That's the way the market moves, and this is how we made money, right? We already made money. We reached our take profit low. We can have a look at the 15-minute time frame now, and we can see a nice cross of the moving average. Now the market will be pulling back likely because it usually after a push it has an exhaustion, and then potentially could again push towards the upside with a push exhaustion scenario. So let's just see what happens. It drops down and then it continues to shoot up even more. And this is where you could potentially enter yet another trade. Let's say somewhere around here, bullish engulfing candle once again. As you can see, Stochastic RSI just around here, bullish engulfing candle, new high. This is a good trading opportunity. Again, let's do 10 pips or something like that and see what's going on. Boom, reaches our 10 pip gain. Stop loss, as you can see, just below these candlesticks over here. Would have been a great trading opportunity for you guys to profit a big. Or if you like, then just place one trade since the beginning. Just carry on increasing this trading gain until it reaches this area zone. Since it's a slow moving average, you might want to just change it up to 100 moving average and then kind of profit as much as possible. If you're happy and satisfied with the profits, you close it off, or you close off when the candlesticks reach the 100 moving average. So let's see what happens. Never did. As you can see, never crossed the moving average. So you carry on making money. You're still making money. And this is what I mean, the power of trends. And as you can see, it crossed around here. This is where the candlestick cross happened. 38.9 pips profit easily just by following the trend. You can see we changed the 200 to 100 because obviously we are now aiming to exit the trade. That's why you want to have a lower moving average. Or you could have been lucky and maybe when it was around 55 pips you would have closed off yourself because you would have already risk to reward wise would have been 4-1, which is pretty damn good. You would have risked only 13 pips to gain 55. That's pretty damn good for me, and I bet it is for you. So if you do enjoy my videos, make sure to watch this one. This one's pretty damn good. It's pretty